Good morning everyone, and thank you for watching this technical analysis video for Tuesday, May 16th. I'm Christina Bartonido, investment analyst, taking a look at pound dollar in the daily chart. And as we can see, the pair couldn't successfully overcome this key resistance trend line coming from May 2021, falling lower and below its 20-day moving average in the aftermath, despite marking a new one-year high at 1.2678 last week. Although it attempted to recover some lost ground yesterday, it couldn't close above that line, above the 20-day moving average. So that makes us think that the sell-off, that the latest downside correction may gain new legs in the coming sessions, and the technical indicators down here cannot rule out that case. The RSI is set to cross below its 50 neutral mark. The MACD is also weakening below its red signal line, suggesting that selling pressures may stay in play. Nevertheless, the bias may not switch to bearish unless the price crosses below that key support trend line coming from September's record low of 1.0324 that is seen at 1.2445. And interestingly, that is also where the price peaked back in December and January. So another negative correction here, and particularly an extension below the 50-day moving average at 1.2388 could generate fresh downside moves, likely that towards the 50% Fibonacci retracement level of the 2021 and 2022 downtrend seen at 1.2285. If this fails to hold, then some consolidation may emerge somewhere between 1.22 and 1.2130 before we head towards the 1.20 psychological mark and the 200-day moving average slightly lower at 1.1955. Now, if the price manages to set a strong foothold around the support trend line, closing above the 20-day moving average, then we may see another challenging battle around this crucial resistance trend line at 1.2635. The break of that, a break higher from here, and particularly an extension above the one-year high of 1.2678 could take us up to the 1.2860 region, where this constraining line is located. While higher than that, the price may reach the 61.8% Fibonacci of 1.30. Steeper increase could also meet this resistance line, short-term resistance line around 1.3140. Finally, summing up, pound dollar is currently facing a discouraging short-term outlook, likely preparing for its next bearish wave after the rejection from this key resistance trend line. Though the bias may, as we said before, the bias may not switch to bearish unless the price slips below this key support trend line and below the 1.2445 level. So that's all for pound dollar today. Thank you for watching. Have a great trading day.